Gold and Bitcoin prices benefit from flight to somewhere else amidst banking sector news and volatile stocks and bonds. In recent weeks, there has been a lot of buzz surrounding the banking sector, stocks, and bonds. With a flurry of news and events shaking the financial markets, investors are looking for alternatives. That's where gold and Bitcoin come in. Both assets have seen an uptick in demand as investors seek a flight to somewhere else. One factor contributing to the current interest in gold and Bitcoin is the volatile stock market. After years of steady growth, the stock market has been experiencing a series of ups and downs. The recent market correction, triggered by concerns over inflation and interest rates, has prompted many investors to look elsewhere for investment opportunities. In the midst of all the banking sector news and volatile stocks and bonds, gold and Bitcoin prices have seen an upward trend this week. This can be attributed to a flight to somewhere else mentality among investors seeking a safe haven for their investments. The banking sector has been under intense scrutiny lately, with news of major banks involved in scandals and investigations. This has led to a loss of trust in traditional financial institutions, making investors wary of leaving their money with these entities. In such a scenario, alternative investment options like gold and Bitcoin have become more appealing. Gold has always been seen as a safe investment option, especially during times of economic uncertainty. It has been valued for centuries as a store of wealth and a hedge against inflation. Gold prices have been on the rise since the start of the year, and this trend has continued this week. The price of gold reached its highest point in 6 months, driven by concerns over inflation and a weak US dollar. Gold is a traditional safe haven asset that investors turn to during times of market uncertainty. As a tangible asset, gold is immune to the fluctuations of the stock market and the value of the currency it is denominated in. It is, therefore, seen as a reliable investment that can protect against market volatility. Over the past week, the price of gold has seen a significant increase, as investors seek to hedge against the risks associated with the banking sector and the broader economic landscape. Gold is also seen as a hedge against inflation, which is becoming an increasingly significant concern for investors as governments around the world continue to print money to prop up their economies. Bitcoin, on the other hand, has seen a more volatile journey. It was initially dismissed as a fad, but it has proven to be more resilient than many had anticipated. Bitcoin has gained mainstream acceptance, and institutional investors have started to take notice. This has resulted in a surge in its price this week, with Bitcoin reaching its highest level in over a year. Bitcoin, on the other hand, is a relatively new asset that has gained popularity in recent years. It is a digital currency that operates on a decentralized network, which means that it is not controlled by any government or financial institution. Bitcoin has a fixed supply, which means that it is not subject to inflation in the same way as traditional currencies. It is also highly secure, with transactions recorded on a blockchain that is virtually impossible to hack. Like gold, Bitcoin is limited in supply, with only 21 million coins set to be produced. This scarcity has helped to drive up the value of Bitcoin, as investors see it as a hedge against the risks associated with traditional fiat currencies. In recent times, Bitcoin has seen a surge in demand, with the price of the digital asset hitting record highs. This has been driven by a variety of factors, including increased adoption by institutional investors and growing acceptance by mainstream financial institutions. One of the key drivers of the recent surge in Bitcoin prices has been the growing sense of unease among investors in traditional asset classes. As stocks and bonds continue to experience volatility, many investors are turning to Bitcoin as a way to diversify their portfolios and protect their wealth. While gold and Bitcoin are very different assets, they share some similarities that make them attractive to investors during times of market turmoil. Investors are increasingly turning to alternative investment options like gold and Bitcoin, as traditional investment options have failed to deliver the expected returns. Stocks and bonds have been highly volatile, with investors unable to predict the direction they will take. This has made investors more cautious, and they are seeking safer investment options. Gold and Bitcoin have also been benefiting from the ongoing economic stimulus measures implemented by governments and central banks. These measures have resulted in a surge in liquidity, which has found its way into the markets. This has led to a rise in the prices of gold and Bitcoin, as investors seek to protect their investments from the devaluation of currencies. The rise in gold and Bitcoin prices is also a reflection of the increasing popularity of digital assets. Digital currencies like Bitcoin have seen a surge in adoption, with more and more people using them as a means of payment. This has made digital currencies more mainstream, and investors are starting to take notice. The rise in the prices of digital currencies like Bitcoin is a reflection of this growing popularity. However, it is important to note that both gold and Bitcoin come with their own risks. Gold prices can be affected by factors like changes in supply and demand, geopolitical events, and currency fluctuations. Bitcoin, on the other hand, is a highly volatile asset, and its value can fluctuate rapidly. This is for educational purposes only and should not be taken as financial advice. The information provided is not intended to be a substitute for professional financial advice. Please consult a financial professional before making any financial decisions. Please, comment, like and subscribe.